Howdy. Today we're going to be talking about how to knock down pre-existing policies. And so there's two, there's personal and there's work. So let's talk about the work one first. So first of all, just basically let them know that, hey, your work insurance is useless. Of course, don't tell them that, but it's all in how you phrase it. So yeah, I have a policy through my work that pays me out 3 times my salary if I pass away. Gotcha, John. So obviously, as I'm sure you're already aware, your work insurance is great while you're employed, and of course take full advantage of that. But John, it is like a work car where if you're fired, you lose your job, you switch jobs, you become disabled, you're unable to work, you have a critical terminal illness, you get laid off, whatever the case may be, you retire. Any of those scenarios occur, John, obviously you're aware that you do lose that work insurance as well. Okay, perfect. So what we're looking at here is these are private bills, which is hence why it's meant to be supplemented with private insurance, and then just move on. That's how to handle the work insurance objection. And then if they have private life insurance policies personally, just a general rule of thumb is just always spend their life insurance. Simple as that. Let's say John's got a State Farm $100,000 policy he took out 6 years ago, and he took it out so long ago and it's so cheap that it's not replaceable, right? In that situation, if you're not able to replace it, you just want to spend it. So if you're going through it, all right, John, do you have any personal life insurance outside of work? Yeah, I got a $100,000 policy with State Farm, I would say, okay. All right, John, gotcha. So I'm assuming at the time that you had taken that policy out, that was to, cover about 2 years of salary for your wife, Mary. Because let's say John's making $50,000 a year. All right, John, so I'm assuming that was to cover about 2 years of salary for your wife, Mary, if God forbid something happened to you. And I'm nodding my head. Yep. Yeah. Okay, perfect. Generally, what's advised is, most of our clients usually typically need to have about 2 to 5 years of their salary covered in addition to the mortgage protection. Or let's say John's got a $250,000 policy. Perfect, John. Yep. So what's a good rule of thumb to have is about 5 to 10 years of income replacement for your wife, Mary, in addition to the mortgage protection. So I'm glad you got that covered, John. Or let's say it's an older client and they've got a whole life policy, a $20,000 whole life policy. Perfect, Mary. So I'm assuming at the time you had taken out that policy to cover the final expense and burial costs. Okay, perfect. So looking at this here, and then just keeping it separate, the mortgage protection and the life insurance separate. If it is something that, like, let's say they took it out recently, and it is something that's replaceable, I used to get excited and just try to go into replacing it right away, and I actually lost a few sales doing that because it kind of freaked them out. I had a couple clients tell me, like, I thought you were here for the mortgage protection. This is just my life insurance. Why are you trying to do this? And they felt like it was this whole bait and switch. So instead of doing that, all I would do is, if they told me that, and say, hey, John, so actually I deal with life insurance as well. So what I'll do for you, once we get to the end, I'll double check with our life insurance companies to see if we could get you a better rate on that as well. And then boom, just jump right back into the mortgage protection, help them with the mortgage protection, whatever makes sense, whether it's covering the full mortgage, half mortgage, equity protection, whatever the case may be, help them with that, close that down. And at the very end, circle back and then go into replacing that policy. Not only, do you have a better shot at closing it, which is what I found of helping that family in the first place, but now you're able to help them out with 2 policies versus 1. Essentially, double your commission and put that family in a much better spot and give them a good amount more worth of insurance. So if you took value, if you found this helpful, please like, subscribe, and share with someone else that would benefit from this video. God bless.